is a presentation of TFNN. It is now time for the Trader's Edge.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes!
Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the November 5th marvelous Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome is to help you to become a better money master and to provide you with the tools that you need to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. Hopefully everybody out there had a great weekend. You know, things seem to be improving slowly but surely up on the eastern seaboard. Of course, the cold weather, I'm sure, was not a pleasant experience for all those out there without power. So hopefully everything gets restored here as quickly as possible. Let's go take a look at one of our tools here. I love this tool. This tool is called Only One Thing. Only One Thing. Just like Curly on that movie, I can't remember it, but only one thing is more important than learning from our experience, and that is not learning from our experience. Yes, you know, today, folks, it can be filled with opportunities for you to express yourself, for you to expand, maybe Fibonacci expansion out there, and experience all of the world around you. A lot of people, they talk about life. Not you. I know you live life out there. Some love it, some don't. A few realize that life can be what you make of it because they've learned from their past experiences. Lessons learned from our experiences, well, they help us to see the possibilities in the game of life. I love the game of life. When we've been there, folks, and we've done that, when you've been there and you've done that, we have experience to know exactly where we do not want to go. Experience, folks, that is certainty. And it is certainly an excellent teacher out there. There's a great Chinese proverb. It goes like this. Those who play the game do not see as clearly as those who watch. So while you're in the game of life, it's really an excellent idea to be able to step back, take some time, go to a place of peace and quiet, and just simply, you know, take a look at what it is that's going on around you. Better yet, how about ask those that are in the game of life with you, because it is easier. You tell me, you know, it's coming off of football Sunday, football Saturday, a lot of great sports out, well, no hockey out there, but a lot of great football. You tell me, can you see what's going on in the game that it seems like the people that are sucked in on the game can't see it? Have you ever sat in those seats, you know, way up in the nosebleed section? You can see everybody just moving around. You're not so much in the game, but it certainly gives you a great perspective as to what's going on. Why do you think in those boxes up there, they've got all of the offensive coordinators and defensive? You know, why is it that they're up higher? They're a little bit removed from the game. I want you to remove yourself from your game of life, because I believe that old ancient Chinese proverb, folks, those who play the game do not see as clearly as those who watch, is really a great experience, a great way for you to be able to learn what's going on inside your life. Work each day, folks, just as I do, on making each performance a little bit better than the last one. Expand and improve. Build on your experience, and you will emerge as a winner in more ways than one out there. Let's go take a look at these markets. Let's go read the meaning of the markets that we've got out here right now as we come to the open. Well, the open is in about 20 minutes. You've got the futures trading up, but with fair value, you're going to see a pop to the downside, at least initially. We're going to go look under the covers, see what we can find out there. You got the Dow futures trading out at about 13,000 even. The ES Mini out at 1406. If you're watching us on TigerTV, you see 4 different quadrants of my screen out here. You can always catch an archive of this show on Channel 9. If you're listening on the radio, if you're listening on your mobile device, tfnn.mobi, we absolutely appreciate you doing that. When you take a look at the quadrants, we're looking at really the 30-minute charts. In the upper left, we've got the ES Mini. The upper right, the Russell 2000 futures. NASDAQ futures on the lower left. The Dow futures on the right. Why do we start off the morning looking at the futures? Because, it's been trading since last evening. It gives us an idea as to what's going on in the overnight session. It helps us to paint the direction as opposed to just dealing with Friday. Of course, if we dealt with Friday, we'd see Friday just took back nearly, in most places, all of the gains out there. I don't believe that it did in the New York Stock Exchange. We'll certainly go take a look at that. So as bullish as my bullhorns were come Thursday, and you always need confirmation out there, well, those bullhorns, they retracted. They're right about skin deep. There's still a little bit of horn up above it. I do believe that we will see these markets move higher. May not be today, but we will see these markets move higher coming into next Tuesday out there. We're going to go look for clues out there. If we take a look around the world, we might get some clues. Over in Germany right now, the DAX is down 37 points. The FTSE is off 27, only 0.5, and, well, we're going to call them both 0.5%. Not too bad, considering what the markets here in the U.S. did on Friday. You had the Russell down 1.6%, the composite off 1.2%, the NDX off a little over 1%. So over in Europe, they're saying, come on, guys, are you serious out there? Because they have not necessarily bought into it just yet. The Nikkei, that was down 43 points, 0.5%. So the Nikkei not down as well. They're also saying, come on, you folks over in North America and the United States, come on out there. How about the folks over in the Hang Seng? Hang Seng off 104 points. The Shanghai only down just a little over 0.1% out there, off 3 points. So over in Asia and over in Europe right now, they have not necessarily bought in to the fact that our markets are going to head lower. Kind of makes you say, something to think about. We got the U.S. dollar index up 17 ticks because the Queen is trading back. The Queen is trying to break that horizontal resistance area. We're going to look at that. You've got gold trading up $7 right now, out at $16.82. Silver up 18 pennies, out at $31.04. Our call-in number is always 877-927-6648. So let's go start over in Euroland. I think that's the place to start here. We take a look at the 30-minute chart here as we were coming into the session of, and this is at 30-minute chart at about 3:30 this morning. The euro getting into a little bit of an oversold territory, I should say. And it does look to me like the euro here on the 30-minute chart is really trying to make a turn. We'll see here coming into this next session that ends in 16 minutes. We got a little bit of a confirmation coming into 9 o'clock. You got a little bullish engulfing candle. There's another signal out there. And so the euro here on the intraday chart is likely going to give us the first indication as to which way the markets want to go out there. Now, what I need to see here in the euro is a close. Well, there's a couple. Ideally, the close would be above 1.27800. Doesn't have to, but that would be some pretty nice confirmation out there. Quite frankly, as long as the euro closes on, this is a 30-minute chart that we're looking at, closes above 1.27805, it still is in play that the euro on the intraday chart is saying it is tired of going lower and it wants higher price out there. But if we go take a look at the daily chart, let's see if it pops up on the screen. It most certainly does. What we can see here is if we take a look at that consolidation area, that consolidation really moving sideways since the early part of September, we'll call it, right around the September 7th area, ever since Mario Draghi Day. You can see the high of that day, which is 1.28157. You can see right now the euro trading just slightly below that. In fact, that's where I'm going to go ahead and move this line down to. I think that is the better line right out there. That is going to be your line of horizontal support out there in this consolidation area. As long as the euro closes above that today, the work to the downside on the euro is likely over going into next Tuesday. What you would see is you'll see a bounce to the top side there. Now, if it does break this area, it's a serious matter. Where would you find the next area of support? Well, I would have to say at the bottom of that September 7th Mario Draghi Day, that low, 1.26250. Let's go take a look at just simply retracement patterns from the low, which we're talking about July 24th out there in the euro, all the way up to the high that was put in on September the 17th. You'll see that it's very close to the 0.382 level, 1.27, looks like about 1.2783 or so. So really not too bad when you consider that expansion that the euro had from the low to the high, also forming a butterfly pattern expansion of 1.618, not even yet having backed off to the 0.382. I'm telling you, folks, that is telling you something to think about out there, because the euro not as weak as one would think that it is, as it should be, quite frankly, as it should be, coming off of an expansion like that. If we go take a look at the King out here, we had the King U.S. dollar index breaking up above its sideways horizontal trading range, doing that with conviction on Friday, having a volume contract-wise, 18,000 contracts. Of course, that 18,000 contracts going into 24,000 contracts from September the 7th, Mario Draghi Day. The high of that, 81.14. So far this morning, about 8,400 contracts out there. The U.S. dollar index going to need more juice to truly go topside. Otherwise, you'll see that the break to the top side of this horizontal range was nothing more than a false break topside. I do expect that to be a little different later next week. If we go take a look at the futures market out here, let's go start off with we'll go back to the 30-minute charts here. Since we've got the ES Mini in the upper left-hand corner here, we can see that, and as I pointed out Thursday evening when I did Tom's show, was that 70, and as we talked about it on Friday as well, as the markets were popping, just as we discussed here, we saw 1 to 1.272, A to B equals CD. And what did I tell you at that stage? I told you that the market had moved into overbought territory. That, combined with the mere fact that Jobs Friday, 75+ now % of the time, you see the market close lower. That's exactly what happened. So as we were coming into the 9 o'clock session, as we were making that 1 to 1.272 A to B equals CD, that's exactly what the market did. It moved lower. If we take a look at just simply on an intraday chart here, this 30-minute chart, A to B equals CD down, what you can see, it made a 1 to 1.618. A to B equals CD down. That price projection, 1401.50, actually got down to a low of 1402.50, 1 point away. So not too shabby there. Ever since then, it has been traveling in the sideways consolidation area. As I said, I do expect the markets will pop to the downside here as we come into the open. Quite frankly, I'm looking, I prefer the bullish sign right now for me would be to see a little bit lower price. That means below 1402.50, and then another couple technical indicators holding up this morning. That could cement here a little bit of a bounce, a little bit of a short-term low out there. If we go take a look at the NASDAQ futures, the NQ, and it's really all going to be about Apple out there. I hate to say it, but it really is all going to be about Apple. And if we take a look at this 30-minute chart here on the NASDAQ futures, it really is all about Apple. In fact, if we take a look at Apple right now, just simply from a price standpoint, Apple closing at $576.80, trading out at $584 right now, all because they sold 3 million mini iPads during the first 3 days of introduction out there. Again, 877-927-6648. Heck of a bullish engulfing candle coming to that 9 o'clock session. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Masters Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, and one more day till Election Day. I don't know about you, but I'll certainly be glad when all of those commercials are off of the air out there. Make sure you vote, folks. I went out and did some early voting on Saturday. Long lines out there, but it sure felt good to get that I voted sticker out there. Please make sure that you go make your voice heard no matter what your thoughts are. Get out there. Tomorrow is Election Day. Should be a long evening, I suppose maybe even early morning on Wednesday. And then we'll see how the markets are going to react to whatever the news is out there. Let's go take a look here at the let's go take a look at the metals market. Let's go take a look at gold and silver. Let's go look at Goldilocks. You've got gold trading out at $16.83 right now. Gold here getting into a sold territory as it came into Friday's session. I suspect we'll see a little bit of a bounce here. Gold has got more room to the downside. In fact, if we take a look just simply at moving averages, one of the sets of moving averages that are good to take a look at to help you understand the trend. You know, they say the trend is your friend. Very close to a little crossover here. It's the 20-day and the 50-day exponential moving average. In fact, you can see here when gold actually crossed positive, let's see which day it was out here. The 50-day is going to be the green line. The 20-day is the black line. So you had 15. It wasn't that day. It was the following session. So it was a session here of August 6th. No, not even August 6th. We're going to have to see, was it August 7th? There you go. August 7th. So August 7th, you had and this is the exponential, not simple moving average. On August 7th, you had the 20-day at 1,600.90 and the 50-day at 1,600.50. That was the first time that you saw a positive cross. Now, what are we taking a look at right now as we speak right now? Very close to a negative cross. You've got the 50-day at 1717, the 20-day at 1720 out there. I suspect what they're going to do is they're going to kiss. Maybe they're going to meet out there, make up just a little bit, and then you'll see them bounce off. I suspect that what we'll see is we'll see a little bit of a bounce here in gold and silver. That would make sense running up into next Tuesday as well. But I do believe you've broken through the 0.382 level. Silver, not you, but silver, or gold has done that. Silver the same. We'll see that when we go take a look at that chart out here. And you've gotten into, or silver gold has gotten into oversold territory. So it's got to work that out. How does it work that out? We're looking at a daily chart, whereas on the other charts we were looking at 30-minute charts out there. So a daily chart obviously has more meaning than a 30-minute chart does. Weekly, more meaning than a daily chart. So how does it work off an oversold or an overbought condition out there? Really one of two ways. It either travels sideways, and that's a possibility, or in the case here of an oversold condition, it would bounce. It would make a retracement. It would bounce higher. Which of those two outcomes, I'm not sure. But I do feel pretty certain we are going to see lower prices in gold. We're going to see that 1630 level attack. More likely, what we might see is we might see that longer-term trend line. That might be the actual next buy on gold. If you take a look at the trend line here, that's going back out to the highs from September 6th. That's that red line that you're seeing on my screen here. Then take a look at the highs on February 28th. That still is in play. What's really in play is Sweet 618. And I do want to say thank you to Bob, who on Friday, he was one of our Great Panthers Silver giveaway winners from last week. He came by the office. He came by Sweet 618 and visited us here. It's always great to shake the hand of our fellow Tigers and Tigresses. So if you're ever in the Clearwater area, we sure would enjoy you stopping up here just simply to say hello. Always good to put a face out there because, what we just take a look at is the other side of the camera lens. And I do see millions of you, but it's always nicer when you're up here in person. So on gold, I expect what we're going to see, again, is a move sideways, maybe a little bit of a bounce higher out here, and then we will see lower prices in gold in the near future. We go take a look at silver. In fact, we're looking at the daily charts here. I'm going to go over to the weekly charts because we're going to go take a look at QE1 and QE2 compared to QE3 on the silver and gold price. You can see silver really looks like the exact same chart here of gold down below the 0.382 level. It's going to want that next floor, but it's got to work off the oversold condition it has. If I go take a look at gold here, and what we'll take a look at, if we take a look at QE1, I'm going to pull this back a bit and explode it. QE1 taking place November 25th, 2008. The low during that week here on QE1 was right up here. So the low was actually 738.62. You can see that gold did get below it the following week. So you can have during QE, you can have newer lows that were established. So the mere fact that we're in QE3 right now, and what we can see here is that gold and silver pulled below it, I think on a longer-term basis, you will see higher price. 877-927-6648. We get back, we're going to go see what's going to pop, what's going to drop. You got BioMarin Pharmaceuticals trading up, silver, wheat, and down. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
You
heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow off 16 points right now. S&P off 2. Composite up 3. Russell 2000 still in the gate, down 10 pennies. Microsoft up a penny. Intel up 14. Google off $3 and change. Cisco up 6 cents. Apple on the other side, charging to the upside, up $9 right now, up 1 6/10%. You've got popping to the upside, as I mentioned, Marin Pharmaceuticals up a nice 26% here. Let's see if there's a buyout or merger in play here. Marin Pharma says pivotal phase 3 study of its drug GALNS is, I guess, a positive result out there. That is got a nice pop up, 25%. Apple right behind them. You've got NAMTAI, NAMTAI Electronics. NTE is the ticker symbol. They're up 14% here this morning. Out with earnings. They had net income of $24 million versus $1 million. Well, that's a heck of a good increase there. Net sales $380 million versus $127. That is quite some growth out there. We'll take a look at NAMTAI Electronics up 14% this morning. RIG, Transocean, that is up this morning, up 4% or so, up $1.91. You've got Dover Corp up 3%, up $1.69. Sohu, SOHU, up 4%. Cena Corp up 3% here this morning. I have to go take a look at Cena, see what that is doing to the downside. You've got Pharmacyclics down $6. That's off 11%. Time Warner Cable, TWC off 3%. Google down $1 right now, so no big shakes there. You've got Nation Star Mortgage Holdings off 5%. Ocwen Financial, that's one of the IBD stocks. I think it's in the top 10 out there, trading down about 3% here this morning. Fastenal, FAST off about 3%. Again, our call number 877-927-6648 out there. Let's go take a look at some of these equities here. Popping and dropping. Let's also pay a visit to some from last week. Okay, so first we've got Generac out there. That is the battery backup supplier out there, having another good morning here, trading out at $35.60 out there. Don't chase this thing. You know, they certainly taken advantage, full advantage of the issues caused by Sandy 1 week ago. If you remember, 1 week ago today, the markets were already closed. They had the futures market open till 9:15. Quite a interesting week we had out there last week. Don't chase this equity. This is an IPO, though. It is the type of chart you like to see at an IPO where, you know, it saw some, it opened, looks like on February 11th. It did make a little bit lower lows back in May of 2010. And since then, everybody on this equity here is at the party having fun because it is at the highs, all-time highs, not just of today, but period. So that is on Generac. Let's go take a look at some of these other equities. Let's see from last week that we had out here that we were looking at. We might be taking a look at, well, Ford. Ford's certainly an equity to take a look at because Ford had some bearish news on Friday. On Thursday, I should say, and it just simply ate that up. On Friday, you did have a little bearish engulfing candle here. That closed at 11:15. You get some higher price today. If you get a close above today on Ford, close above $11.19. It's trading at $11.19 right now. It'll go ahead and just simply discard that bearish engulfing candle, setting up for it to move up to the 11:55. Area, more likely into the 12. Now, it's going to, as we said, it's going to run into resistance here at the bottom of April 27th. That's 11:52. But I suspect what Ford wants to pay a visit to the $12.05 range, and that'd be a 1 to 1.272. A to B equals C to up. We go take a look at Apple. Certainly, we have to see what Apple is doing out here. We'll put this on a couple different time frames. So if we take a look at Apple, clearly breaking a downtrend out here, kind of ultra short-term uptrend, I should say, that coming off of the May 18th level. So broke through that, and I would say it broke through it finally with some conviction on the 22nd of October out here. If we take a look at A to B equals C, I'm going to get rid of that trend line out here. A to B equals C. There's a couple of them that you could choose. I would choose the one now coming off of the highs from September 21st all the way down to the low of October the 9th out there. That price, 623.55, making a very shallow retracement. And you can see very close to completing the 1-to-1 A to B equals CD down this morning here, gapping up. Let's go take a look at intraday volume out here because it is important to watch Apple because the markets are not going to move higher with the Qs, with the NASDAQ moving lower. Apple on Friday getting really into a oversold condition. Hasn't seen that condition since the 18th of May out there. And the 18th of May, which you did have with Apple, did gap higher and then went ahead and made its run up to the highs in September out there. I'm not saying the exact same thing is going to happen out there, but I am pointing out that Apple had not been that oversold since that date. It is always good, folks, to learn from experiences, right? That means when you're taking a look at charts, you want to go back and look at the experiences of price and see what kind of patterns were out there. Let's go take a look at the intraday chart here on Apple. We're going to put it on a 5-minute chart just simply because the market has only been open here for the last 10 minutes. So if we take a look at Apple, let me just refresh the screen here. We'll pull it back, see if we can see anything. Of course, we do know that Apple's at some lows out here, so I'm not going to be able to pull this 5-minute chart back far enough, I don't believe. But if we do take, I would say, if we do take a look at Apple, so gapping up with some decent volume here this morning, where is Apple going to run into resistance if it moves higher? It'll run right into this high volume 5-minute bar at 9:35 on November 2nd. So the low out there is 593.75, the high of 596.95. So that's an area that you're certainly going to want to watch. Now, that has 1.1 million shares out there. If you're coming into that area with volume, that would be a positive sign. So I read some reports out there, I think it was just the media analyst, talking about how if Apple did not sell at least 5 million minis, that you would see a very negative reaction in the Apple stock. So far, that is not the case, but it is something to pay attention to. Of course, I don't know if they were looking to the oversold conditions that Apple had, and I do believe Apple's got lower price in the future, just may not be today and right now. Let's go take a look at this BioMarin Pharmaceuticals, up 27% out there. Let's see what that is trading into. BMRN is the ticker symbol. So that is up nice this morning, up with volume. So let's go see what it is attacking, taking out a swing point, certainly with volume of an A to B equals CD. So this thing here looks like it may be at all-time highs. Let's put this, we'll first start with a longer-term chart, and then we'll go ahead and dive into it. So we're taking a look at the monthly chart here, up above the all-time highs out here, which will take you back to July of 2012. That high was 44.18. You're at 47.80. On the monthly chart, that had 35 million shares. We're just into the month now, so no reason for us to really pay much attention to that. But this thing has taken out a area certainly of resistance out here. And you can see on the monthly chart, if we just simply draw the line across the screen out here, let's do this, let's put this in black. You can see that the highs of February 29, 2008 was a resistance area. As the equity got all the way back up into it in July of 2012, it rejected that area, moved lower. Volume there was 35 million versus the 39 million, so it didn't have enough juice. It was tested again with 20 million shares on September. Also tested last month in October, 36 million shares going against the 39 million shares, so it was building some strength to the upside. This is a very bullish candle out there, needless to say. Have to watch and see how this continues to trade. Let's go take a look at a weekly chart out here. And so on the weekly chart, now this thing, you got to be careful. If anything goes wrong with this equity here, this will pull back to February of 09. That price is $18.47. It's at $47.95. I'm not saying it's going to do that, but if you're in this equity, you want to be paying attention to that because that is a high volume, untested low out there, February 20th, 2009. It's had certainly a nice run ever since there, but other than this downdraft here from October the 26th, hasn't really had much in the way of significant volume to the upside, and that is taking a look at the weekly chart. That was on BioMarin Pharmaceuticals. Let's go take a look at Dover Sol. No, it's Dover Corp. DOV is the ticker symbol. That is trading up this morning. Then we'll go take a look at some things moving to the downside. DOV looks like that is coming into an area where it most recently broke down. So let's go take a look at that. So it's coming into an area of resistance, that area of resistance being this gap here. It's untested. Today is the first time that this is going to be tested. As we draw the line across, we're talking about the low of the gap down, which would really be the September 21st. So I guess one way to look at it might be the high of the gap down. So you're taking at the low of September 21st out there. That low, $60.70. It's at $67.78 right now. That swing point has 1.7 million shares. Thus far today, 311,000 shares. So it's got the juice inside it. We'll see if this area acts as resistance. Resistance would be today a close below 60.70. That is on Dover Corp. I did want to take a look at one other one, which to the upside, that was this Nam Thai Electric, NTE. So we wanted to go take a look at that, see what that is doing to the upside. Then we'll go take a look at some of the equities moving to the downside. Give me one moment here. NTE is the ticker symbol. So this is gapping up here this morning and doing it with some good volume in it. So this has got 868,000 shares so far. and this thing is moving into, well, let me put this on a weekly basis. You can see this thing certainly had traded higher. So let's put this on a weekly time frame, pull this back, see what it's doing. So it's making a 100% move of a move, taking on a set of swing points going back to June of 2008. Only 1 million shares up there, so volume-wise shouldn't be any problem. It's also got a swing point out here going back to 2007, November 27, 2007. That is 2.4 million shares. The high of that is $14.10. Also coming into this little supply line that comes right back here to September 1st, 2006, 8 million shares to the downside. So you can see this thing has got some pretty decent resistance. What this would do and what this would need in order to break out would be clearing this swing point going all the way back to November 17th, 2006. So this did have a nice sign of strength. That is for sure. That sign of strength. The week of August the 31st out there, 11 million shares to the upside, has not coming back to that breakout area. And so we'll see how this thing here trades as it comes into some resistance. Let's go out to Fish in Riverview. Not on the phone, okay, but listening. All right, he wanted me to take a look at SWHC. SWHC, I believe that is Smith & Wesson Holdings Corp. So let's go take a look at Smith & Wesson's Holding Corp out there. Is the ticker symbol SWHC. Give me over to this place right here. SWHC. We'll do that for our man Fish. And we can see this here. Give me a moment to blow this chart up on the screen. There we go. Now let's just erase everything. We'll just simply start from scratch. So we got Smith & Wesson right now trading out at $9.02. This thing pulled back on Friday, got down to a low of $8.58. So the last sign of strength on this was on September the 7th. Had a nice sign of strength, moved up with volume, 14 million shares. And if we take a look at Smith & Wesson, there's really, looks like a couple of gaps out here. Let's take a look at them. Let me make sure. So I'm going to first start off with September 4th. The high there, 815. The low of the prior session, 813. So no gap there. You then have a high on September 5th, 879. Low of 880. So you do have a 1 penny gap out there. Still, 1 penny is 1 penny, and that gap thus far has held. That's what was tested on Friday. But one test does not make a test. You need about 3 tests would be ideal on any type of gap or really anything horizontal, sideways trading range, anything like that. You'd like to have more than certainly 1 test out there. But that level was held. Again, that was tested with 3.2 million shares as it was really coming down. Well, if we take a look at September 6th, 4.5 million shares. That's a more difficult test to hit. Also coming into 3 million shares from September 5th. So if Fish, if you're long this equity here, so far so good, but you want to see a little bit more bullish sign than what you've seen. You want to see that, and if this area gets tested, that's okay. You want to see it hold up. That could be a test of Friday's candle, that low of 858, where this equity could pull back to, where this would be a nice buy if you're looking to go long. This equity here would be a nice buy at the September 4th level. That would be about somewhere between 786 to 815. If it pulls back with less than 1 million shares, that would be ideal. But really, what it's going up against is this breakout area from September the 7th out here. Now, if we take this back even further and take a look at Smith & Wesson, what you also see is another breakout. That breakout from June 29th out there, if we pull that across, we can see that area also was tested twice. Almost looks like a similar pattern to what it is that we see here right now. 877-927-6648, Dow off 34, S&P off 4. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. As we come into this segment here, the last segment of the Trader's Edge show, we've got the Dow down 41 points, S&P's off 6, Composite down 6, small caps off about 2 points right now. Everything down anywhere from 0.25% to about 0.4%. The S&P being the weakest right now of them all out there. I have a request to take a look at Chesapeake Energy. CHK is the ticker symbol out there. If we take a look at Chesapeake Energy, 52-week high, 100. Is that right? How about that? 52-week high, $128. 52-week low. Do I got the right ticker symbol? CHK. How about that? I do. I don't. But I'm not buying the data that I'm seeing on one screen. It's trading out at $18.10 right now although we do see a high up here back at about July of $69. Anyways, let's go take a look at Chesapeake Energy, see exactly what it is doing. On Friday, it was moving down into a little open window out there that held. However, that area is truly being tested here this morning. So on Friday, November the 2nd, moves down with 30 million shares going against an area where it had most recently gapped up, which was August 6th to August 7th. The high of that gap being the August 6th time frame was $18.40. Now, 26 million shares on that session. The area where it was really gapping up was 41 million shares. So as it pulled back on Friday, only 30 million shares to the downside. And I really take a look at it coming against the 41 million shares. So this is going to need some more energy to the downside. And the individual asking me to look at this is actually short this stock. So, and they've been short for a while, so they're certainly in the money. So number one, you want to make sure that you tighten your stop. You might say, well, where would that be? Actually, let's just go put up, and we'll come back to the equity here in a moment. Let's go put up my position size calculator. Let's put in the symbol CHK. And if you haven't had a chance to test this out, go to the homepage of TFNN.com. You'll see over on the left-hand side an area where you can test this for free. I see the data from Yahoo isn't coming through right now, so I can't give you the average true range. So during the next show, during the Money Master show, I'll check into that and see what that is. But that gives us the last 10 days average movement, and so one place to put your stop would be above that level. What you do want to see today from a short side, you do want to see it close inside below $18.40 out there. If it closes above that, you'd have a rejection twice now of that window. That would be your support area. If you get it closed below it, no longer becomes support. You can just simply erase it off of your screen. That would then say that this equity would move down to the bottom of that swing point. That would be $17.15. Then you'd start benchmarking the volume against that 26 million shares out there. This does have an area of support that was tested a couple of times. That goes all the way back to May 25th. Where this thing then should find real support is right in about the $15.71 area, which is below the target that you're looking for. So I believe $16.75 was one of the targets. Just watch it as it starts coming down in through these swing points. The first one being August 6th. The next one being July 24th, that low $16.62. And if you're coming in there with more than 21 million shares, what this should do is come all the way back and test that open window out there at the $15.71 range. It's an $18 stock. I always say be very careful when you're shorting anything less than $30. Why? Because it has a lot of potential to the upside. Now, this equity is getting into oversold territory. And the last time that it did that, it's got a little bit further to run to the downside, but each time that it does that, it seems to bounce up. So just keep your stops tight. Folks, stay tuned. Tom and I will be up next for the Money Masters show. Thanks for joining me on a wonderful, marvelous Monday. Hopefully you're off to a great start of your day. Look forward to seeing you in a few or tomorrow morning. Take care.